All right, let's dive into this, shall we? We've got the 2024 integrated report from Kose Corporation. Really interesting stuff in here about, their whole business, their financials. Oh, and they talk about all their sustainability efforts too. It's pretty in-depth.
Yeah, I've had a chance to look it over, and it's a lot to take in.
That's why you're here to, help us, help me, and help our listeners kind of break it all down.
You bet. It's a pretty fascinating company, especially when you consider where they started.
Post-war Japan, right?
hmm
1946. I mean, wow. Think about that context.
Yeah, incredible. Like everything was scarce.
And their founder, Kozaburo Kobayashi, he insisted on quality
Mm.
over everything. Can you imagine? Like everyone else is trying to produce as much as possible.
Right, and he's focused on the best ingredients.
It's like the opposite of what you'd expect. I guess that's why they're still around, all these years later.
For sure. They call it their mind to follow the right path philosophy.
I like that. And that's taken them global, hasn't it? I mean, 68 countries.
It has. They're everywhere.
Their brand strategy is something else, too. They've got the high prestige, right? The
Mhm.
prestige line, and then cosmetaries.
Three distinct segments. Yeah.
Feels like they're covering, like, every price point imaginable.
Yeah, it's pretty clever. It lets them reach all sorts of consumers. Like Decorte is one of their high prestige brands, super high end.
Cutting edge technology, right? Like really fancy stuff.
The whole experience is luxurious, and that's usually how they go into new markets. Those customers who are willing to pay, those are the first ones they target.
Smart. Then you've got prestige, which is, more for everyday people.
Right. It's still high quality, but you can find it online or at a drugstore,
Yeah.
more accessible.
And cosmetaries.
Yeah.
That's the one that's kind of new to me.
Yeah, it's like they're blending cosmetics and toiletries, like really nice everyday stuff. Self-care, but without the high price tag.
That's a growing market for sure. But managing all those different brands, like targeting all those different
Yeah.
people, that's got to be a challenge. Like, how do you keep the messaging consistent across such a, I don't know, such a diverse portfolio?
Oh, that's a good question. It's something they definitely talk about in the report. They emphasize this idea of like a cohesive brand identity, but at the same time, each brand has to have its own personality.
Right, that makes sense.
They put a lot into R&D, research and development. I mean, so every product line really hits the mark for whoever they're aiming for, and their marketing is really sophisticated.
Yeah, you can tell. Their 2023 financials are pretty impressive. Net sales hit 300.4 billion.
Up 11.2% year over year.
UEA, as they say.
It's definitely a sign that there's strong demand for their products, even with, the economy being what it is globally.
Okay, but I did notice their operating profit took a bit of a dip, down, was it 41.9% year over year?
Yeah, down to 15.9 billion.
So why is that? Like sales are up, but profits are down. What's the story there?
Well, remember how we were talking about them being global? That means they're kind of at the mercy of different economies all over the world.
So when one region has a bad year, it affects them overall.
Exactly. Like Japan was strong, and their North American brand, Tarte, did really well.
I love Tarte. But what about China? That's a huge market for them,
It
right?
is, but they had a slowdown this year economically. Plus, there were those consumer concerns about, the release of treated wastewater.
Right, I remember reading about that. It really hit their bottom line then.
Yeah, it definitely had an impact. So even though their portfolio is diverse, they're still vulnerable to those regional ups and downs.
Global expansion, it's a gamble, right. But here's what I found interesting. Despite that profit drop, they still paid out a steady dividend to shareholders, just like they did the year before, 140 per share.
That's a smart move, actually. It sends a signal. Like they're confident in their strategy for the long term, committed to shareholder value, even when things get tough.
Yeah, it's like they're saying, look, we're going to be okay. We're in this for the long haul.
Exactly. And that long-term thinking, it shows up in their plans to, boost shareholder value even more, not just with dividends.
All right, well, let's get into those plans. They're aiming for a dividend payout ratio above 60%, right?
Mm-hmm.
So they're definitely committed to those payouts. But they're putting a lot of resources into other initiatives too.
Oh, yeah. They call it their 3Gs strategy. Global expansion, still a focus. Gender inclusivity is a big one. And then appealing to new generations.
Smart. Get those Gen Z folks on board.
Exactly. It's ambitious, but if they can really tap into those markets, align with those values, it could really pay off.
And I see they're really upping their investment in things like digital transformation, more R&D, research and development, and they're even building a new factory, right? An eco-friendly one.
Yep. It's clear they're playing the long game here, investing in what's going to drive growth down the line, not just thinking about today.
So it's not just about making a quick buck. It's about, like, building something sustainable, literally.
Right. But to understand, just how much potential those investments have, we need to really dig into their financials. What's the story their balance sheet is telling? What about their income statement and those cash flow statements?
All right, let's get into those numbers. Let's see what we can find.
Okay, so where do we want to start? How about the balance sheet? It's always a good place to get a sense of a company's overall financial health.
Balance sheet, right? Assets, liabilities, all that good stuff. You know me, though. Numbers aren't always my strong suit. So, what were some of the key things that stood out to you when you were looking at KOC's balance sheet?
Well, the first thing that kind of jumped out at me was their equity ratio.
Their equity ratio.
It's really impressive, actually. It's over 70%.
Okay, 70%.
Yeah.
And that means what exactly in terms
Yeah.
of their financial strength?
So basically, for every, let's say, every 100 yen in assets, only about 30 yen is financed by debt.
Oh, okay. So they're not super reliant on borrowed money.
Exactly. The rest, the other 70 yen comes from shareholders' equity.
So that gives them a lot more flexibility, right? To make investments and stuff.
Absolutely. It means they're less risky in terms of insolvency, and it gives them more room to maneuver, if they want to build new factories or acquire other brands or even just fund those 3Gs initiatives we were talking about.
Makes sense. So when we look at their assets, what are they actually putting their money into? What are they spending on?
Well, their biggest asset category by far is property, plant, and equipment.
That makes sense, right? They're a manufacturing company. They've got factories all over the world.
Exactly. All that equipment, the buildings, it all adds up.
Okay, but I also noticed they have a significant amount of goodwill on their balance sheet. What's that about?
Ah, goodwill. Yeah, it's an interesting one.
It sounds kind of vague.
It's basically the premium they paid when they acquired other companies, over and above, the fair market value.
Oh, okay. So when they merged with Tarte Inc.
Exactly. That was back in the 2010s. So that goodwill, it represents the value of the Tarte brand, its reputation, customer relationships, all that intangible stuff.
Right, the stuff you can't really put a price tag on, but it's still valuable.
Yeah, it's about their potential
Yeah.
for future earnings, brand loyalty, all of that.
Okay, so that's the balance sheet. What about the income statement? That's where we see their actual financial performance over a certain period, right?
Right. It shows their revenues, their expenses, the top line and the bottom line.
Right, right. And we saw that their net sales have been growing pretty consistently.
Yeah, they have. It aligns with their strong sales performance in Japan and with Tarte in North America.
But their operating profit, that took a hit last year, didn't it? Is that reflected in the income statement?
It is. We can see that their gross profit margin has been it's been fluctuating.
Gross profit margin, that's basically how efficiently they're turning sales into profit.
Exactly. And those fluctuations, they're probably tied to, the challenges they had in China. Plus, they've been investing more in marketing.
Right, to support all their new initiatives.
Yeah. So they're spending more to boost brand awareness and drive growth, even if it means a bit of a squeeze on their profitability in the short term.
It's a balancing act.
It is. Trying to keep things sustainable in the long run, but also dealing with those, the pressures of today.
Okay, and then there's the cash flow statement, right? The third big one.
The cash flow statement, yes.
Yeah.
This one's all about tracking the cash, where it's coming from, where it's going.
Right, because a company can look profitable on paper, but if they don't have the cash to actually pay their bills or fund their operations.
Exactly. It can be misleading.
So what are we looking for in the cash flow statement? What are the key things we should be paying attention to?
Well, one of the most important metrics is free cash flow.
Free cash flow.
It basically represents the cash they generate from, their core operations, the cash that's available to reinvest back into the business, pay down debt, or, return to shareholders through dividends.
So it's what they have left over after paying for all the essentials?
Right, after covering operating expenses and, any investments they've made in property or equipment.
Okay, that makes sense. And what does Kose's free cash flow look like?
They've actually been generating positive free cash flow pretty consistently over the past few years.
Okay, so that's a good sign.
It's a great sign. It means they're in a healthy position to support their operations and, their growth strategy, all those ambitious plans they have.
All right, so we've got the balance sheet, the income statement, the cash flow statement. We've looked at all this data. What's your overall take on KOSA's financial health? Are they in good shape?
I would say they are in a relatively strong position. Their balance sheet is healthy, their revenue has been growing, and they have consistent free cash flow.
But they're not without their challenges.
It's okay.
We talked about, that dip in operating profit,
Yeah.
and there's always that uncertainty in the global market.
Right. There are always challenges, but a lot of their success is going to depend on how well they manage those three Gs: global expansion, gender inclusivity, appealing to those new generations.
Yeah, those three Gs, they're really betting big on that strategy.
They are. It's bold, but, it's also the key to their future growth if
Yeah.
they can pull it off.
Okay, so how does all this financial data, like how does it play into their plans to create shareholder value? We talk
Well,
about dividends, share buybacks. What are the specifics? What are the numbers? So we've really dug into their financials, right? Balance sheets, income statements, cash flow, the whole nine yards.
yeah.
And it seems like, all things considered, they're doing pretty well.
Yeah, they're managing things well.
But uh, what does all this mean for creating shareholder value? We talked about dividends, we talked about share buybacks, but what are the actual numbers? Like, what are they planning?
Well, that's the key, right? The numbers. That's what investors really care about. So for dividends, they've committed to a payout ratio above 60%.
Above 60%. Okay.
Yeah.
So basically, they're going to give at least 60% of their profits back to shareholders.
It's a form of dividends, yeah.
So if you're holding KOSA stock, that's a pretty clear picture of what you can expect in terms of return. But what about share buybacks? Where do those fit in?
Share buybacks, those are another way to give back to shareholders. When a company buys back its own shares, it reduces the number of shares that are out there, on the market.
Right. Okay. And that does what exactly?
Well, it can increase the value of the remaining shares because the earnings per share, those go up. It's a way to signal confidence.
So it's like they're saying, hey, we think our stock is undervalued, so we're going to buy some of it back, make the rest of it worth more.
Exactly. It's a smart move, especially if, they're really confident about their future growth.
But where do we see that in the reports? Like, how do those buybacks affect their financials?
You'll usually see it in the cash flow statement and on the balance sheet. On the cash flow statement, there'll be an outflow of cash
Yeah.
for the purchase of what they call treasury stock.
Okay.
And then on the balance sheet, the number of outstanding shares, that goes down, and their equity is reduced.
Got it. So big picture, it looks like Kose is kind of doing a little bit of everything to create shareholder value. Steady dividends, strategic buybacks, and of course all those investments in their 3Gs strategy.
Yeah.
For future growth.
Exactly. They're not just focusing on one thing. They're trying to find that balance between giving back to shareholders now and investing in what will hopefully drive growth and profits later on.
It's a good reminder that being a public company, it's not just about making money. It's about keeping everyone happy, investors, employees, customers, the whole deal.
Yeah, it's about balancing those different interests.
So with all these different initiatives, all these moving parts, what do you think about KOSA's prospects moving forward? Are they on the right track?
Well, it's always hard to predict the future, especially in an industry like this. Beauty's pretty competitive, always changing. But based on everything we've seen, their commitment to quality, their brand strategy, their financial performance, and, how they're approaching sustainability, global expansion, I'd say they're in a good spot.
They're going to face challenges though, right?
Of course. I mean, the economy could take a downturn. Consumer tastes can change on a dime.
That's true. But it seems like they have a solid foundation and a vision for where they want to go. What I really admire is their dedication to that mind to follow the right path philosophy. Even though they're, this huge global corporation now, it's not just about the bottom line.
Yeah, it's great to see a company prioritize values, and I think it really resonates with consumers, especially now. People want to know that, that the companies they're supporting, that they're doing things the right way.
Absolutely. So for our listeners out there, if you're interested in a company, it's all about beauty, innovation, and, actually doing good, Kose is definitely one to watch. And as always, keep diving deep, keep asking questions, and keep exploring. We'll see you next time.